Yo, guys, so we're going to do a quick market recap. Yesterday, something very interesting happened. We had a reactive event coming out regarding the US and Qatar, caused major outflows on gold. And as you can see, this bearish price action in front of me. Unfortunately, I was not active around this time, so I did miss this initial move on the sells, although I would have took them at these prices. But once price got down to here, I am no longer thinking about sells anymore, and I'm looking for that exhaustion. So basically, what happened is Trump secured a $1.2 trillion deal with Qatar, which is obviously, we don't need to go into the details of it. It's just extremely optimistic for USD. So, what does that mean for gold? Basically, inflows into USD, outflows on gold, causing major downside. So, initially, there was a massive move even before NYSE open price was back at 31.75s, basically ranged until the end of the daily candle. And then we started to pick back up in the next session and continue the way down. But at this point, when prices are this low, I'm no longer thinking about sells anymore. And I'm looking, how can I position myself to capitalize on some potential buys? Although this is counter trend, especially at this point, as we start to dig deep lower and bottom out around the 31.30s. So basically what I'm looking for here is lower time frame signatures to indicate that some bulls might be taking over so I can capitalize on the correction of these downside moves, because it's no longer beneficial for me to try and sell at these low prices because I missed this trade initially. So instead of forcing the sells at lower prices, I shifted my mind towards how can I position myself in the best place possible based on the current market position. I mean, based on the current market, based on the current market conditions. So I was no longer thinking about sells even during the following Asian session after that. I knew that the impact from the reactive event could still be lingering. So it was price dig price dug deeper into obviously the lower prices. But then something interesting happened as we came into the London session. We started to shift back bullish on the lower time frames. And this is where it got very interesting for me because I knew that there was a there was a very high chance of us having a pullback after an initial break of the lows. So when you know there's legs down like this, you know that inevitably price is going to get exhausted. The sellers will get exhausted, just like if it was pushing up, the buyers would get exhausted, and eventually they're going to have a pullback. I was there to capitalize on this pullback. Although it was a counter trade, I positioned myself in the correct place to capitalize on this counter trend trade. Because as you can see right now, the 31.70s or the 31.77s, 75s ish, price is no longer in an optimal place for me to buy. Obviously, given with the current like intraday slash lower time frame bearish price action and bearish trend, we're breaking new lows, making new lows here, making new lows here. It's counter trend, right? But I understand where we are in the markets, and I understand that we're going to probably get a pullback to induce more sellers into the markets so we can continue the bearish trend. So I accepted the fact that I missed this trade, and once price is breaking into these low prices, it's no longer an optimal place for me to sell. So, like I said, switch my mindset. Instead of chasing the trade or chasing the sells based on this reactive event, you basically just have to be at the charts to capitalize on those sells. So yeah, as we shifted back bullish on the lower time frames, let's go down to 1 minute real quick. So I got that confirmation, break of structure going into London session. Now this is good. Price pulls back, obviously, on a minor level, What did we just say? When we break a high, we expect a pullback. Failed to make new lows and push back above the key level with strong bullish structure. And obviously, we continued on to break these minor highs and even fill the gap to the left of us, correcting this downside move. Obviously, meaning the pullback. So yeah, that's how I adapted to the 31-38 buys during the London session today against the trend after I missed the initial sells. You've just got to know where you are in the markets, boys, right? Sometimes you will miss positions. We have life, we have other things to do. Um, there was no way that anyone was going to know that they were going to get that deal done at that time. It could have been 3 hours after the initial time. No one really knows. When you get those reactive events, you don't know when it's going to happen. You simply just have to react in the moment. But if the moment has passed, and although it still had an effect later into the new daily candle, the optimal sell prices were long gone after NYSE opened yesterday. The sell prices, the optimal sell prices, were long gone. So you just needed to accept the fact that you missed the trade at that point, just like I did, and I adapted to the current market position, to the current market conditions. Fuck's sake. So yeah, guys, just a quick breakdown on what to do, and how you can actually capitalize on short-term trades against the trend based on where pricing is right now. Although I knew on an intraday level and even on a lower time frame level, we're still very bearish for a reason. But I knew there was an opportunity to still take some buys on a short-term basis. Even though my target was only here, there was still opportunity for price to keep on running. We just obviously don't know when it's going to lose momentum and start shifting back bearish at this point. But yeah, guys, like I spoke about before, this isn't the what I've just spoken about there no longer applies to the prices here. That's what you've got to understand. Like it's a total different ball game now. You have to like change your analysis and reanalyze all over again. But yeah, it's inducing more sellers into the market at this point because it's more of a favorable, based on the current price action, it's more of a favorable place to enter sells rather than buys. Just like this was, prices down here was much more of a favorable place to enter buys than it was sells, despite us being very bearish. So yeah, guys, just a quick video on how to adapt to missing a trade and counter trend trade short-term positions.